Sorry. Okay, so we're looking at question Atlas, right? Atlas, a published account, our first one. Okay, please go ahead and start from the requirement again. Thank you.
Okay, so prepare the statement of profit or loss and other comprehensive income for Atlas Co. for the year ended 31st March 2023.
2013 now. So we'll take it at 2013. Sorry for talking over you. We'll take it as 2013. So we're looking at 2013. The X is just to keep the question fresh. So in your exam, they won't ask you an X3 or a Y3 or a Z3. They will just give you the year. So in your exam, you'll be expecting, prepare, in this question now, you'll be saying something like prepare a statement of profit or loss and other comprehensive income for Atlas for the year ended, say, 31st or 31st December 2020. So they write the 2020 directly there, something like that. Okay.
Okay. So prepare the statement of financial position for Atlas Co. as at 31st March 2013. Calculate basic earnings per share for the year ended 31st March 2013.
Do you have that in your question to everybody?
Yes.
All right, great.
Yes.
All right, great.
Yes.
All right, great. Great. Okay, so we'll go upstairs now. Start the question. So 3 things they've asked us as requirements: the statement of financial position, the statement of profit or loss, and other comprehensive income, and the statement and the basic EPS.
Earnings per share, yeah.
And the earnings per share, yeah. All right.
Okay, so should I read the...
Yeah, okay. So maybe I
should
should read that.
Go to the requirement?
Yeah, to the additional information, to the notes.
Yes.
Yeah. Okay, so before we do that, let's just try and perceive what is happening. They said the following trial balance relates to, so the following trial balance relates to Atlas so at the end of the year, as at 31st March 2013, they've given us a trial balance. Trial balance, the final thing that we'll now use to publish the account. So you'll see the debit side of the trial balance. Sorry, I can't do that. The debit side is the line. So everything that is an asset or an expense will be on the debit side. And then the credit side of the trial balance will have all equity, liabilities, and income on them. So one should be careful about where everyone is going. And then the other thing I will say is, for the questions, you will generally see that if there's an adjustment to be made to the question, then you have a note here. So the way you do a published account so that you keep yourself stress-free as much as possible is to start from the top of the question. So equity shares, you find where equity shares is. So the first thing is you open a statement of financial position and a statement of profit or loss. You have both of them, and then you start from the top and start working through. Equity shares is in equity. I go to my statement of financial position, put the equity shares. Share premium is in equity. I go there and there's no notes to it. Then I continue going down and I meet note 1. On note 1, I go to the note 1 and read the note 1. Once I'm done with that, I go back upstairs and continue from where I stopped and go and continue putting them inside where they're supposed to be until they point me to note 2. Once I get to note 2, I go down to note 2 and deal with note 2, and I come back upstairs and continue down. If they point me to note 3, I go down to note 3 and look at note 3 and do whatever is in note 3, and then go back upstairs again. Now, as you get more comfortable and you get more confident, you will see that some things are scattered kind of, so you will know how to ignore those things. But as a rule of thumb, as the standard, we would start from the top and walk downstairs and continue going down until we get to the last one. That way, the chances of you omitting something has been mitigated, amongst other things. If you get to a note under exam conditions that's too difficult for you, please just ignore it. Get to the end first, and then go and judge that case later. Especially with computer-based, it's very easy to, as we practice now, I'll show you a few things. You know how to, if you change something, it can change all the other mistakes you've made about that thing. So it doesn't make any difference. It's not terminal. It's not like paper and biro where you have to start canceling stuff. If you work your spreadsheet properly, then your spreadsheet will be internally consistent, so that if I put 10,000 instead of 100,000, if I put a 0 there, it will do all the other adjustments where that 100,000 was supposed to reflect instead of the 10,000, and I won't have a thought about it. Do you get the point I'm making?
Yes.
All right, great. All right. So our statement of that. Okay. So we have our trial balance, equity share, share premium up to current tax at the end of the day. You did taxes recently, so this should be fair game for us to have fun with. Okay. So please go ahead and read the following information is irrelevant. If they said it's irrelevant, then you don't need the notes now. Let's just go and finish this thing and go home. Yeah. So shall we? Okay. So I can
Irrelevant or
start.
relevant.
Oh, is it relevant? They said.
Mm-hmm.
Okay, please be careful. If I were the examiner, one day I will put irrelevant here because I know people will still go and make it relevant for themselves and they will not finish the exam because they told them it was irrelevant, but they just want to do the note sha. So please be careful. One day it might be irrelevant, and if it's irrelevant, please ignore it. But today is relevant, so let's work. All right, note one.
Can I continue?
Yes, ma'am.
Okay, so non-current assets. On 1st of April 2012, the directors of Atlas Co decided that the financial statements would show an improved position if the land and buildings were revalued to market value. At that date, an independent valuer valued the land at $12 million and the buildings at $35 million. And these valuations were accepted by the directors. The remaining life of the buildings at that date was 14 years. Atlas Co does not make a transfer to retained earnings for excess depreciation. Ignore deferred tax on the revaluation surplus.
Great. Before you move on, thank you. Um, have you heard of excess depreciation before? Have you done work on excess depreciation before?
Uh,
The only
yes,
place I've it was is in group accounts.
Okay, it's
You
everywhere.
see that
Excess depreciation is PPE. So excess depreciation essentially is depreciation, the depreciation that's higher than it's actually spreading your revaluation surplus over the number of years remaining from the day it was the revaluation place, right?
okay.
So the idea about revaluation surplus is we keep if you have a revaluation surplus, you keep it in revaluation reserve instead of in retained earnings. The idea is you've not realized that surplus yet because you're still going to use that PPE for or an intangible asset for the whatever the number of years the economic useful life of that asset is. So since you're going to use it for a long time and it's going to be within the company, if you valued it upwards, you're not supposed to realize that because it's not really realized because you're still going to use it and you're subject to fluctuations that can happen in the economic environment. So we keep it in a reserve. The reserve, I usually say that the revaluation reserve is the storehouse for profit until it is realized. So we are just keeping it there until we realize that profit at the end of the life of that asset. So what we do in excess depreciation is to spread that surplus instead of, since we are saying we don't want to realize it on the first day, it will also, because it will be unfair if we realize it on the first day to other years that will also for which the asset will also be used. Then it will also be sensible for us to say if we are not going to realize it in the first year, then if we realize it in the only in the last year, then we're being unfair to other years that also contributed to that surplus. So what we do is we spread the surplus evenly over the number of years of that asset from the date of revaluation. That's what excess depreciation essentially is. And in one of the questions, we'll see how to do excess depreciation, or one or more of the questions. Is that fine?
Yeah.
All right.
yes.
So we move on to the second paragraph of note one.
Okay, plant and equipment is depreciated at 20% per annum using the reducing balance method and time apportioned as appropriate. All depreciation is charged to cost of sales, but none has yet been charged on any non-current assets for the year ended 31st March 2013.
So I think a pretty explicit question. Um, So while land and building seems to be depreciated using the straight line method, the plant and equipment is depreciated using the reducing balance method, and time apportionment. So if you bought it in June, for example, and your or June, if you bought it in January, for example, and your year end is 31st March, then only 3 months depreciation will apply because you bought it I'm saying, for example, you bought it on 1st of January and you're preparing your accounts to 31st of March, then only 3 months depreciation will apply. So that's time apportionment, what we'll call prorating your depreciation, spreading your depreciable charge over using time apportionment, prorating it. Okay, all right. Next one, the note 2.
Atlas Co estimates that an income tax provision for $27.2 million is required for the year ended 31st March 2013, and at that date, the liability on deferred tax is $9.4 million. The movement on deferred tax should be taken to profit or loss. The balance on current tax in the trial balance represents the under or over provision of the tax liability for the year ended 31st March 2012.
Great, very, very good, outstanding. So, and the requirement was prepare a statement of profit or loss. Second, prepare a statement of financial position, and ultimately, if we have time, prepare the basic EPS. Basic EPS will be quite straightforward. It will be your earnings divided by your number of shares. You didn't have any share issue during this year, so there will be no need for weighting the average number of shares. So this will just be a bonus 2 marks. I think our number of shares, if we go upstairs, where's the number of shares? Is your number of shares? No number. Okay, equity shares at 50 cents. So 50 cents. So our number of shares will be 50 divided by 0.5. You get how to do the number. Your number of shares is the book value of your shares divided by the par value of the individual share. So that will be 50,000 divided by, we'll have to change the cents to dollars. That's $0.5. So 50,000 divided by 0.5 is 100,000. I've gotten the denominator of my EPS. The remaining thing is my profit after tax. And you can assume any number now, and you'll still get a mark for it. Did you just hear what I said?
Yes.
Yeah.
That's the difference between 79 and 80 in the exam, or whatever you say. I don't want to call that number. That's number, really. So that's the difference between 79 and 80. I'm under pressure. I have 1 minute to go. I know that if I write after time, there is a possibility that I don't see my result. I have 1 minute to go. I've looked at the number of shares as 50,000 divided by 0.5, which is 100,000. I can't get to the end of my profit or loss yet. And I have a very easy mark to get. I just put 20,000 there, and my EPS is 0.5. The marker comes, and all I need to do is to say profit after tax equal 20,000. 20,000 divided by 100,000 equal to 0.5. And the examiner says, you may stop writing. If you continue writing at this time, you're in breach of the, you just stop writing, drop your biro. You've gotten that 1 mark. You've gone from 79 to 80. I'm proud of you. All right. So we have our questions. What we'll just do, like I said, I've given us background as to what we'll do. We'll just start from the beginning and walk down to the end. We have only 2 notes, and the notes are quite interesting. The first is with respect to revaluation and all the whole PPE thing, which is fair. They used an independent valuer. So if they used an independent valuer, then the revalued amount is appropriate. The revalued amount is acceptable. That's what the IFRS requires, that when you revalue your PPE or any other asset, that it should be carried out by an independent valuer, someone external to the company, because you can't do self-assessment to give external parties information about your performance or your position. It must be someone external to that is independently valuing. If not, the chances that when you wake up in the morning, you say, this PPE looks good, it's 10 million. Tomorrow morning, you say, it doesn't look very good, it's 8 million. And next tomorrow, you feel very happy with yourself and you call it 12 million. So that's what they don't want. So you get an independent valuer, someone that is qualified, a Jide Taiwo, or I don't know who else. Those people that do valuation of property and then they can value it independently, and then you can use that figure in your financial statement. And the remaining life of the building, so I like this: land and building. Land is non-depreciable, so the only thing that it will bother about depreciation is the building part of it, right?
So, Mr. Brian, can I ask a question? So, if an independent valuer wasn't used, if in the question it says a dependent valuer was used.
Oh no, not. That's, I like the opposite of independent, being dependent. But what they will say, if they carried out an internal assessment of the building, so the idea of the independent valuer is someone external that is trained to do that, which will almost always be the case. I shudder to say something is 100% of the time, but in this case, it has to be 100% of the time. If they kept quiet about it, they didn't say anything, you assume that it's an independent valuer. That's why they put it there. But if they told you that the company carried out a self-assessment and determined that their building was this and their land was this, then you're within your right to say, since the company carried it out, I don't accept that. If they, however, tell you that the directors of the company have they have to say something that will reflect the fact that the directors of the company have gotten information from someone that is outside that organization that this is the value of this, and then that you will use. It will be very strange, really, really, really strange for them to talk about them carrying out self-assessment at this level. But if they carried out self-assessment, and for all intents and purposes, because I don't even know how that will be structured, if they carry out a self-assessment, then the self-assessment is not acceptable under IFRS. You can't do a self-assessment of your own, particularly land and building, or any other PPE. Do you get that?
Yes.
If you will, that's why things like internally generated intangible assets must meet those strict pirate criteria. They must meet them, because it is, if you internally generate an asset, then the chances are that you use emotion to give the value to that asset. I have a painting in my room. I'm very emotional about that painting. If you ask me how much that painting is to me as a value, I will call it $20,000. To you, that painting is not worth up to $200, but to me, it's what. So that's the problem, and that's the whole idea. Is if we go back to our conceptual framework, is about relevance, is about faithful representation. Those are the two. What's our fundamental characteristics? It must be relevant. It must be faithfully represented. What does faithful representation mean? It must be neutral. It must be free from error. It must be complete. I will not be neutral if you give me a value, if you ask me to value something that belongs to me. Neutrality will be diminished if you give me that opportunity. So someone that is independent should make that valuation. Is that clear?
Yes.
All right. So we move to our question. Let's go and do battle. All right. So I'll just open another. No, we're using Excel now. All right. So we open a blank sheet and we work. So we'll call sheet one. What did you say? Atlas. Oh, okay. Yeah. So we have that. Is this too small? Should I increase the size?
It's okay for me.
Increase.
Okay. Let me write Atlas so that we'll see how bad it is. Oh no.
No, it's okay.
Even myself can't see it from here. So Atlas, cool. Okay, so I'll increase it slightly. 18. Bold. And then increase it slightly. I think this is fine now.
Yeah.
All right, so great. So we start our work. Cut straight to the chase. Statement. I usually like to do the statement of financial position first, and it doesn't matter in the order the question was set. It has no no impact on how you do this. Just have a standard way of doing it and do it like that. Whether they ask you profit or loss or financial position first has nothing to do with nothing. The marker will mark both of them. So for a statement of financial position as at 31st March, right? Was March? March. Or was that 13, right?
Yes.
All right. All right. So the only other thing, so there are 5 things that should be there: the name of the company, the name of the reporting entity, the name of the financial statement, the date at which that financial statement is being published, the currency,
Denomination. Yeah.
and then the denomination. So we have the 3 of them, and we're done. Oh, this is not going to work, right? So I have to find a way to go about that. Dollar. How do you do that? 1,000 apostrophe, hopefully something to keep it there. Yeah, it did. Good. So that's that. So we have immediately assets. So this should take you, with practice, this should take you like 2 minutes to do or less in under exam condition, because that's where you could waste time. No mark for formatting. Please don't waste your time formatting under exam conditions. It's not going to add any value and you will not be happy. And please use as much abbreviations as possible. So non-current asset is NCA. I know what non-current asset is. I'm marking your script. So please don't go and write non-current assets. You're wasting time that you don't have. C as is current assets. I know what it is. Don't go and write current assets. You're wasting time you don't have. All right. And then we go to equity.
How about CA?
CA is great. CA is great. CA is great. CA is actually better. Continuous assessment is so good. Actually better.
Are you joking?
I'm not joking. I'm not joking. CA is very good. I just call continuous assessment because that's what came to mind. But anybody that is marking this script and is thinking that it's continuous assessment you wrote under in your financial statement, that person is a drug addict, and the person will not, someone else will mark it that is sane. So don't worry yourself.
Okay.
All right, so we have all of that. We'll set all of this up. Okay, maybe we can even do this. All right, we'll set everything up. Then the next thing is we can go downstairs. So what I'll do, because I'm in class, just because I'm in class, not for any other reason, is I'll just do the total assets and the total liabilities so that it will balance. So that we'll check whether it will balance at the end of the day. So total assets on this side, just for class purposes. Please, there's no mark for total assets in the exam. So please don't waste your time doing things that will not add any value to your scores. And then we'll come down towards the end here and do total equity and liabilities. So that I'll also do here, just to check that it comes together by the time I'm done with this. And that's only for my own use. All right, and then we come to our statement of profit or loss. And you can do P or L here. Nobody's going to quarrel with you. Profit or loss. I've already done all those things on top. It's not particularly important, but then I could just have as at, or for the year ended now. For the year ended, and I intentionally wrote year as YR. Very, very acceptable. And I've already put the dollar sign here. All I'll just do is to make sure that all my answers, all my figures, my final figures will be on this G throughout when I'm working. And that will be fine. So I don't need to write this $1,000. And then all I need to do is to go somewhere here to the other side and put my workings or workings. So with that, Done. So with this battle set, so
Mr. Brian, is it going to be like a similar spreadsheet under exam conditions?
I'll show you the spreadsheet. It's not Excel, but it's very similar in terms of functionality. If you're an Excel guru, I'm not. They're not the spreadsheet of the ACCA spreadsheet is significantly less powerful than Excel for those people that are Excel gurus. But the basic things you need to do: copy and paste. So cut. No, I don't know cut. Copy and paste. Sum. All those functions. IRR. What other functions do we have? Drag. All those kind of things, they're all within the purview of that spreadsheet, but it is less powerful than regular Excel. Is that clear? All right. So we have work one when we get to work one, and then we start our question. So I will let me just go back to the question, and I'll need your guidance because I have the question on my screen and I don't want to share my screen to stress me. So I want my screen to be wide enough for me to be able to work. Okay. Wait, are you seeing my screen?
See you.
No.
My Excel.
No.
Yes.
So all these things I've been saying, you weren't seeing them.
No, we are seeing it. It's just now we are not seeing it.
Oh, okay. I think I stopped share. Okay. Fear catch me. Okay. I've been surprised that nobody complained. All right. Great. Okay. So we'll go back to the question.
Sorry.
So please, yes, sir.
Are you Mr. Brian?
Yes, I am, sir.
Okay.
Okay. So what we'll do now is let's just walk through, and I'll need your guidance. Because it will be stressful to be going back and forth. So you have the question. If there's anything that I can do, maybe to snap it and send it to you on your phone or something, whatever, just tell me so that you have the question. Let me just work with that spreadsheet. Yes, let me just work with the spreadsheet so that I don't have to be constantly, because that would just burn one out. So we know what we already have our plan. We start from the top, we get the figure. Please, when you call the wrong figure, please, you can do this kind of thing if you had this kind of thing on soft copy, or go and get a ruler that is see-through. Once you do this, you will see the 50,000. Because by the time we get to bank now, someone will say bank is, oh, sorry, let me go back. Someone will say bank is 42,200, or it will say it is 6. I don't know what bank. So please just be careful. Like now, if we drag this, accounting generally and financial reporting particularly is not for someone that doesn't see you. So please, if you go and put the wrong figure in office, they will come and carry you to sell. So the bank, if you see the bank now, a bank is on the credit, which is worrisome. Bank is supposed to be on the debit. So your mind starts working before we get there, just for the sake of it. Please remember that. And then revenue, you can drag revenue and get to where it is. So when two of them are highlighted only, then you know you're on this thing. Please, or get a transparent ruler and draw this thing. Don't just be gambling with figures, because if you put the wrong figure there, then it's not terminal. It won't make you fail the exam, but you know what I'm saying. Hopefully you know what I'm saying. All right, so we start from the beginning and we start scrolling down. So equity shares 50,000, share premium 20,000. I've read through the question. I know there's no issue of shares, so there's the 50,000 will be the answer at the end of the day. So we go and then we just start calling the figure. When you get to note 1, then at that point we should come back, because we have usually land and building at cost. At cost is what they bought it for whenever they bought it. That's not our business. Then we have accumulated depreciation with respect to building. That is related to this land and building at cost. So you remember that the cost minus accumulated depreciation will give you your carrying value as at the point where at the point where they have accumulated the depreciation up to. So in this case, your land and building at cost, and then your accumulated depreciation as at 1st April 2012, which is the beginning of the year. So we get it to the beginning of the year, and then we can depreciate it for that year. Is that clear?
Yeah.
Then the other thing to do is go back and find out, when did they do the revaluation? They did the revaluation at the beginning of the year. So as at this, that's when the directors had sense and said, let's revalue at the beginning of the year. The carrying value and the revalued amount must be compared at the same point in time. If the revaluation was done at the end of the year, then we would have needed to, first of all, do cost minus accumulated depreciation at the beginning of the year, get the carrying value at the beginning of the year, and then depreciate it for that year before we now compare it to the revalued amount. The revaluation, you must compare the carrying value and the revalued amount at the same point in time. And there are two ways this will come in your exam. Either at the beginning of the year, which is the case in point for this particular question, or in some other questions, it will be at the end of the year that they did the revaluation. In that case, you will first of all get your carrying value at the beginning of the year and do the depreciation to get it to the end of the year before you now compare that carrying value with the revalued amount. In this case, in this particular case, since the revaluation is done at the beginning of the year, then all you need to do is cost minus accumulated depreciation. You get the value at the beginning of the year. That's the carrying value at the beginning of the year, and you compare it to the revalued amount. Once you've done that revaluation, at that point, then you now depreciate it to the end of the year. Is that clear?
Yes.
All right. Please note that if you take timing for granted in financial reporting, you will fail it. You will fail financial reporting, and you will get a score that you will be so miserable, and you will hate me or IK, not me, thank God in this case. You hate IK for it, but it will not be his fault really. Maybe it was his fault too for not telling you very clearly that you should not take timing for granted. Timing is the most important thing, more than any knowledge you have. If you look at a time period, at a point in time, 31st March 2013, and it doesn't minister to you, it doesn't have any impact on your answer will be wrong and you'll fail it. All right, let's work now. Let's get through. I think we're at 10 o'clock, so we have, oh, geez, 45 minutes. That's impossible. Okay, let's see what we can do. It's fine. It's always the first question is always tough to get to the end, but I'm happy this question is not too long. So we have a fighting chance. All right, so we start with the first one. Ordinary shares, right?
Yeah.
All right, so I'll advise you. Let me say this. All right, so let's go. We start with the first one, ordinary shares, right?
Yes.
All right, so let's go O shares, and you can write OS or O shares, whatever. That's fine. How much?
50,000.
50,000. A lot of money. Okay, so 50K. We're on G, right? G is where our numbers are. So we already have this. If it doesn't work, we can always shift it back. If we found out that we had an adjustment, then what I would normally do is to put 50,000 here. I would have put, so equal to that 50,000. I could have put 50,000 here. And then if I have any adjustment, I make the adjustments until I get to the end of it. I'm sorry, it's not supposed to be here. It's supposed to be under the G. That's where my final answers are going to be. So if you have this kind of thing, you can maintain internal consistency and your life will be a lot easier. You will not be too rattled by anything. So let's start, since we are starting, let's start with good practice. So we'll put it here first. At the end of the day, we'll sum everything up and carry them to that side. Do you get that?
Yes.
So ultimately, we will now carry everything to the final answer. Okay, so great. We go to the second one. I think it was share premium. Right?
Right.
All right. So what was share premium?
20,000.
20,000. 20, 1, 2, 3. Good. Great. We're done. Next. Half mark, half mark. You've already gotten 1 mark. You've not broken sweat. Life is looking very good. Okay, next.
Retained earnings.
Retained earnings. Retained earnings at the beginning of the year. So we go leave a few space because we know we have a revaluation reserve. So retained earnings. Scores?
11,200.
11,200. Great. Another half mark in the bag. So we'll make an adjustment. Of course, the product of your statement of profit or loss is your profit or loss, which will go to retained earnings, which will be added to retained earnings. This is retained earnings at the beginning of the year. We add our earnings for the year, and we get our retained earnings at the end of the year. in G, and whatever adjustments, if we had any adjustments to make to retained earnings. So if we paid dividends, then dividends will be subtracted from that retained earnings, and then we get what was retained at the end of the year. Okay, next.
Land and buildings.
Land and building. So that's our work one. So we have land. We know we had a note to that, land and buildings. And L&B is land and building. I don't know what else L&B would be. For those hip hop fans, will know what L&B is, but for the rest of us, L&B is land and building. Okay, so that's that. So let's leave the space between our workings and our financial statements. I can also make this one bold. And all this design, please don't try it in the exam. You just be annoying the person that is marking it. So we can separate them now into land. I think I will need to expand this a little bit later. So we can have land and building. Because land is non-depreciable, it will differ from the way we will treat the buildings. So it's good practice to separate them and work with them like that. I need to expand this a little. All right, so we have cost now. So we start with our cost of the land and building. So cost, what was cost of land?
10 million.
From the trial balance, right?
Right.
Yes.
So 10 million. So we're working in thousands, remember? So 10,000. And then buildings. How did they give us that information? Maybe I should just go back, because that could be, they could give us in a funny way so that we make sure we understand what is happening. They can give us the total and tell us that the land component is this amount. So it means that we should separate
that's
them.
what they've done.
All right. So let me go back and let's make sure we
Building
work.
will be 50,000.
All right. So they gave us land at 10 million, and they told us land is 10 million. So building is the remaining out of the 10 million, which is 50 million. So for internal consistency, we'll go back and do that. Okay. Yep. Where is my WP? Where is this thing now? Okay. Upstairs. So building, we can say, is equal to, so that will make our lives good. So it's equal to 60,000, just for the people that would maybe be looking, because once this spreadsheet is sent to you, so that it will be very useful. So it's 60,000 minus that 10,000, right?
Yeah.
You get that,
Right.
Abi? And I use the 10,000 there. So if I make a mistake, it's easy to correct. All these things are skills that you should develop, because they make it easy for you to work. So 50,000, great. Then we have our cost. So accumulated depreciation next, right?
Yes.
Depreciation. So I can expand this a little bit. I'll continue making those adjustments. All right. So accumulated depreciation for land, no land. So nil here. So we can put 0, because the nil will not make it easy for us to subtract. And then for the building is what? They give you accumulated depreciation just 2 steps down. After this, they give you accumulated
20,000.
20,000. Can you see that? Let me go back.
Yes.
All right. So I know that some of us are quite strong with this. For those of us that are just starting, I have to do a few things. Let's just make sure we're all together. So in this case now, they give you accumulated depreciation, and they gave you for building, and they give you 20,000. So you have that. That should be subtracted. And then when we get to plant and equipment, the same thing. We'll have the accumulated depreciation at 24,500. That clear?
Yes.
Great. All right. So back. And so we have our accumulated depreciation at 20,000. 1, 2, 3. Great. So we now have, from there, we have our carrying value. And CV is carrying value, not that you usually use for application. So carrying value at the beginning of the year, 1st April 12, right? 12. Right? Nobody answered me.
Yes.
Okay. So that's equal to the cost minus the accumulated depreciation.
Okay.
And if you want to, under exam conditions, you can copy this, control copy, and control paste, and it will do that for you. When Mr. Richard was teaching me this thing a few months ago, now I'm using it to shine, and he's in class looking at me and saying, "This guy, you're just a criminal." Yes, I am, sir.
Can I ask a question?
Yeah, please go ahead.
That's 20,000, the accumulated depreciation. Can we do it negative 20?
Yeah, and then add it, and then add,
And add it
add
up.
it. Yeah,
Okay.
absolutely. Anyhow you want to do it, anything you do that works for you, and you'll see me switch a lot. I don't care. All the
Okay.
matter will come and do is to click on this and see what the formula
What?
was. So if
Okay.
you were 20,000 minus 20, and then you added it, it would have been M7 plus
Plus, yes.
plus M8, and it would have gotten the same 30,000. Absolutely.
Yes.
Absolutely. Anyhow you do it is fine. So we have the carrying value at the beginning of the year. Then we have our revalued amount now. So revalued amount. Our revalued amount is what? From the notes now. So you go downstairs.
12 million.
Land 12 million, so 12,000. And building
35.
35,000, 35,000. So we have, in that case, a surplus. So our revaluation surplus.
Surplus.
So our surplus will be equal to the revalued amount
Minus
the
carrying
carrying
cost.
value. Yeah. And then same
Okay.
thing. So we can copy this. That's the great thing about it. So we can copy this and paste it there, and it will do the work for us. Control V, and 5,000. So our total revaluation surplus now is 7,000. You can see that, right?
Yes.
Yes.
Yeah.
Great. So we have this, and we can make this bold because I want to use it later. So that's fine. So my revalued amount now is this, and then I can copy this and bring it down. Or you can just leave it like that and continue your work. It doesn't make any difference. So if you will, I want to change that carrying value now. I want to call it something else. You get, sorry, I want to change the revalued amount because the revalued amount is now the revised carrying value at 1st April 12, right?
Yeah.
Yeah.
All right. So I want to do my depreciation now because I have to depreciate that. So the depreciation for the year, pardon my pun, this is kind of thing I would like to see in you in the exam. Depreciation for the year, you've written it in as short as possible. If you write depreciation for the year, all that long thing, nobody cares. So how many years did they say the depreciation? How many years did they say the remaining life is post
14 years.
evaluation? 14 years. So I have depreciation. So that will be equal to this figure divided by 14. Straight up, I wrote 14, and that is 25. So it means that my carrying value at the end of the year now, because I've depreciated, will now be at 31st 03 13. I think it's 13, yeah, 13
Yes.
will be equal to this minus
Minus this.
that, which is this,
That's
and I can copy
copy and paste.
and paste. And you're just chilling. You're not doing much work. You're not broken any sweat. What did they tell us? No excess depreciation. So our life is too easy. There should be a law against your life being this easy. But then it is easy. And we're not complaining. All right. So that's that. So in this case now, we know where all the information is going to, and we start. So immediately after this, my first thought will be to go and start my notes on my second working on cost of sales. They told us all depreciation should be reflected in cost of sales, right?
Yeah.
All right.
Yeah.
So I know the things I want to keep going. These are all workings. These are all workings. The revalued amount was here. I have my revaluation surplus. My revaluation surplus will go to revaluation reserve. And then my closing carrying value will go to PPE. And then my, so if you will, I can get equal to this plus, so that I get the total carrying value for land and building, because both of them will go upstairs. And then I also have my depreciation. My depreciation is here, so I can make that bold too because that's going somewhere. And then my revaluation surplus is equal to the total, that's the two of them that will go to the reserve. Is this fine?
Yeah.
All right. So I have all this information and I know the three of them that are going where they are going to. So those are the three things. And if you don't want all of this, I could have just added everything there and it wouldn't have made a difference. So first up, PPE. And then I will put, the way I do this is I'll write work one. And then I'll be putting all the workings that I will do there on the side. So I come here and put is equal to, that's my closing PPE. So that one goes. What else? I have revaluation surplus. Revaluation surplus, I have to go downstairs. So here, so I have revaluation reserve, work one.
Surplus. Okay.
Yeah, it's
Okay.
the reserve. The surplus is the surplus. The reserve is the reserve. Remember that this surplus will be, if you will, if you go downstairs, so revenue, we go downstairs. After the profit after tax, we'll have other comprehensive income. And under other comprehensive income, we'll have our revaluation surplus. So that's where we can call it surplus.
Okay.
So that figure now, we can carry it to G. So it's equal to, and we'll bring that figure, that 7,000 there. However, no, that's fine. We can also do that, but I would prefer to put it here now so that it doesn't make any difference. I can now finally carry this 7,000 to part of the reserve. So if there's another reserve, then that will go there. If there's no other reserve, then it will just be the 7,000. And then finally, my depreciation. Remember, my depreciation goes to cost of sales. So I open work two. So I say.
Sorry, Mr. Is
Yes.
there a reason why we're not looking at plant and equipment?
Plant and equipment.
We have not finished. We have just done land and building. We'll do the plant and it's systematic. After we finish land and building, we'll do plant and equipment. After we finish plant and equipment, we'll go to the next one. We have just done only land. If you wanted to open 5 of them, that's land, building, plant, equipment, all of them, great, fine, I accept that. And that's very right. But I like to do them slowly so that it's easier for me. I finish with this thought, then I do the next one. I'm doing the cost of sales because everything will still go into cost of sales. And I'm not saying this is the only way to do it. I'm just saying this is the way I prefer. I'm doing it right now. If I did this question in 6 months' time, I might do it slightly differently. Is that fine?
Yeah, sure.
Okay, please. Okay, and please just make, so cost of sales. So our cost of sales now, I'm doing that because I know that, so cost of sales will always start with trial balance. So of course I have the one that will come from the trial balance, definitely. So I just have the per trial balance and I leave that one. When I get there, I'll put it. Then I have depreciation of building. So that one will now be, that's why I had to open this immediately because I know that I have that information to work with. So I just come and put depreciation of building. I put it anywhere. So I just put it here and it's equal to that depreciation. And this is a good time to check, make sure you didn't forget to put anything. I put the 7,000 where it's supposed to be. I put the depreciation and I put the carrying value. That's all. We're done. Good. We'll move on. So now I leave a few because I'll have other depreciation, impairment, any other thing they want to put here. So I leave a few lines and go to my work 3. And because I've read the question, I know that my work 3 will be plant and equipment, right?
Yeah.
Okay.
All right. So plant and equipment. Or P and E, Christ. This is not good for my health under exam conditions. So P and E. I'm so angry that even though I've written it full, I come back and I change it. But maybe someone that's reading it will not appreciate this P and E. So let me just like plant and equipment. And I'm wasting time. This kind of thing you should not be doing in the exam. Or decide what you're going to write before you enter that hall. There's no time. Because that 3 hours will come like a thief in the night. All right, so we start with cost. What's our cost?
It's 94,500.
94, 500. And then our accumulator depreciation,
24,500.
24, 500. So that's good. And then we have our carrying value at the beginning of the year at 1st April 2012. And thank God for Excel, it will just give us the date, which will be equal to this minus that, right?
Yeah.
Yes.
Great. So we have 70,000. Now all we need to do now is the depreciation for the year. There's no revaluation or anything. So depreciation for the year, and depreciation for the year, they said was what? How many years? Or 20%, right?
6%.
20%.
20% reducing balance. So it will be 20% multiplied by the carrying value at the beginning of the year.
Yeah.
Yeah?
Yeah.
Great. So we have 14,000, and with that we can end it up. So our carrying value at the end of the year will be equal to the carrying
70
value at the
minus
beginning
40.
of the year minus the depreciation for that year. And with that, we've done what Napoleon could not do. And I can make that bold too because I'm taking that one upstairs. So this now goes to the depreciation for plant and equipment. So depreciation of plant, and in this case now I'm not going to write it in full, and equipment. And I have that figure, so it's equal to that figure. And then I go, my carrying value at the end of the year, it goes to PPE. So this equal to that carrying value at the end of the year. And you're done. You're done. You're done. So I can come here and put slash work 3, because work 3 too is the next one. So the marker is fine. Immediately it says work 1. Work 1 is for the first one. Work 3 is for the next one, and so on and so forth. Him too is enjoying marking your script. So he's rewarding you for making his life easy. All right. So that's that. We're done. What's next?
Inventory.
Inventory. Did they tell us the date of the inventory?
Yeah, 31st March
So that's at the
2018.
end of the year. So you won't need to do anything. So you can take it for granted, inventory, or you can do what we said. Always put them here. If there's no adjustment, they will still go to the other side. If there's an adjustment, then they would adjust for it. So inventory was how much?
43,700.
43,700.
43,700. We move on. What's next?
Trade
Trade
receivable.
receivable.
Receivables, REC. How much is receivables?
42,200.
42.
Yeah,
200,
200.
yes.
All right. What's next?
We have bank overdraft.
Bank.
So bank is negative bank. We saw that it was a liability. So we come here and put bad bank, the kind of bank I don't want to have. All right. So how much was bank?
6,800.
6.8 was a liability. Be careful that was the bad bank under current liabilities. All right. What's next?
Deferred tax.
Deferred tax. Let's ignore tax to the end. Taxes. Or we'll do all the tax workings. I know that you've practiced that with IK. So we'll do all the tax workings together. So it doesn't matter. You see it. Current tax is the last one. Once we get to current tax, we'll go to tax and round it up. Let's make sure that we have almost passed the exam before we do tax. If we do tax now, but bogus, make it look. So let's just do that thing first.
Okay. Trade payables.
Payables, liability. So we have payables. So pay, and you just write pay is fine, or payables, but I won't write that trade though. If he doesn't know that it's trading, then on his own. Scores
3500.
500.
35,
100.
3,500. All right. Next,
Revenue.
revenue. So we go to profit or loss. We've opened for revenue before. Great. How much?
550,000.
550.
Yes.
550,123. All right. Great. Next.
We've done cost of sale. Okay, cost of
No, we've
sale.
not. Cost of sales.
No.
So we said per trial balance. So we'll put the figure here. So how much?
411,500.
411,500. Great. So we got that. Next,
Distribution cost.
distribution cost. So we have revenue. So we can open for cost of sales because we know cost of sales. And we
Yeah.
say cost of sales work two. Remember that we're going to bring work two when we finish with cost of sales. So after that, so you can now start our gross profit, which I don't care about. There's no mark for gross profit. It's the value that is revenue minus cost of sales. So no mark for it. I won't do that if I were you under exam conditions. So after gross profit, we can now do our distribution costs
Okay. Let's see.
and admin expenses. So how much was distribution cost?
21,500.
21,500. And immediately after that will almost always be admin expenses. So I can take that for
Yeah.
granted. So admin expenses, how much?
3,900.
100.
13,900. Who's next?
Dividend paid.
Dividend paid.
Oh, they paid dividends in this case. So go and subtract that from retained earnings, right? We said that earlier. I didn't even realize that. Okay, so how much?
It's 20,000.
20,000. So we subtract that directly from revenue from retained earnings. Please, dividends is not subtract, it's not a cost. So if you put dividends inside profit or loss, they will not smile with you. It will not be funny. And in this case now, Mr. Shade, in this case now, we'll put a negative there so that we don't forget and add it because we'll start looking for it later.
Aha.
So I'll put a
Yes.
negative there. So it will be easier for us to remember that this is a negative. So when we are summing everything up, it will sum up nicely. All right. What's next?
Bank interest.
Interest, finance costs. So
Yeah.
we had admin expense. Okay, so after that, we should have our operating profit, which I don't care about. So I'll just come and put finance cost somewhere here. And after that, I have tax. So finance cost, how much?
700.
700. Great. What's next?
Foreign tax.
That's the last one.
Yes.
Yes.
There should be a law against this question. This question is too simple.
There's no two.
Yeah, of course, the note is tax now. Tax is not past like tax. It's so simple to do now. So tax expense. That's so our work for now.
Oh.
So we go back and do it. This is the simplest question in your this thing. The questions will not always be this simple. Please take note, but they will not be too hard once you get the concept. So work for tax. So we'll do all the taxes here now. Wow. All right. So tax, if you will, we have the current tax and the deferred tax. I hope me and Ike agree on the fact that the way I start this is to have my current tax estimate, CTE. So because we are doing it the first time, current tax estimate. I hope this doesn't look like estate. So current tax estimate. Then we have add. Remember that add slash less under slash over provision, right?
Yes.
Then we have we have our deferred tax, the one that comes from deferred tax. That's why they told us that that figure should go to profit or loss. And then with that, we have our tax expense. That's the one that goes, that's the answer that goes to the profit or loss as, I don't know what I wrote here, expense, tax expense, expense. Okay. So that's the current tax side of it. Then under that, we'll do our deferred tax. So we have deferred tax, and then your deferred tax is two things: your opening, and then you have your closing. So once you've opened all of this, and then you have the one that goes to profit or loss, the one that will go upstairs now, and then you just pick the question, fill in all these blanks, and you're done with the exam. Really, you're done with the 20 mark. Okay, then you have your EPS last. So we go to that and read through it, and that should really lead us to the end of our story. So we know where everything fits in as we read through. Okay, so we have our notes now. Remember our deferred tax on top. This deferred tax is your opening deferred tax, right? The 6.2.
Yes.
Then your current tax here is your add or less under or over provision. It's on the credit side, so it's an over provision. It should subtract. If you were on the debit side, it would be an under provision. The under provision is an expense. The over provision, you over provided, so you have an income. You have something that should reduce your future tax payable. On the other hand, your under provision means you under provided, so you should pay more tax in the future. So it's debit and credit for expense and income for the tax. So this is credit, so it should be a negative. And then the rest of it is to go and read the question. So Atlas estimates that income tax provision of that's your CTE, your current tax estimate is 27,200. And then for the year ended that, and the deferred tax liability at the end of the year is 9.4. Remember, the opening deferred tax liability was how much? Was 6.8, right?
Yes.
6.8.
Yeah.
2.
All right.
6.2.
Was it 6.2 or 6.8? Please, let's just drag this thing out. Please, and
It's 6.2.
don't worry, we'll see it now. Okay, 6. Devil work. Okay, 6.8 was overdraft, true. All right, so 6.2. We dragged it, it's consistent. And then what else do we have? And then they said, of course, you choose an under or over provision. They will never tell you whether it's an under or over. They put it on the credit, so it's an over provision. And with that, we're ended. We're almost done. Really. Got very little more to do. Okay, so current tax estimate, we already had that 27,200. Add or less under provision. We said it was a less under provision, so minus. You can put the minus. How much was that? Did we see 12,000? 200. And then we can go to deferred tax. Opening deferred tax was how much?
6.2.
6.2. And then closing deferred tax was 9 something.
9.4.
400. So with that, we can do our profit. The one that goes to profit or loss is the balancing figure. So in brackets, beta. I tried to look for beta. Was it beta I was looking for that day that I did not find? Let me see the symbol. Yes, please.
Is it okay? The current tax, okay, because it's in the credit side. That's why you're subtracting it from the current tax. Okay.
Yes, from the current tax. These are two separate workings, kind of, but they are related to each other. So I hope everybody knows what a beta is. When you put beta in a computation, it means that this figure came from within this place. It didn't come from, so don't look for it. It's here. It's from here. So this beta now is the closing minus the opening. So it's actually the closing deferred tax minus the opening deferred tax. That's what beta is. So
what
please don't.
You get beta.
Closing minus opening. The closing.
No, what did you pick?
The sign is from.
I went to symbols. If you go to symbols, I use it regularly because it's something I use every time. Because so it's up there. It's my first one. If you see my recently used symbols, then you usually see greater than, equal to, not equal to, and then beta. Beta will always be up there because I use it very, very regularly. So beta just means don't look for the figure. It's there. Don't go and start looking for where 3.2 is in the in your trial balance or in any note. It's not there. All right. And so if you wanted, you can also put the beta on the deferred tax too, because it's coming from upstairs. So please copy and paste. So remember that the figure, the way it is here, this is positive. Just carry it the same way upstairs. If we are negative, the same way it is, just carry it upstairs. So it's equal to that figure. Do you get that?
Yes.
That's what's going to profit or loss. Great. And then finally, our tax expense. Our tax expense will be equal to the sum of everything from top to bottom, the three of them really in this case. So the three of them, the sum of that, and you close. That's that. And with that, I've ended this story. So, and we know where there are three things that will move from here for tax. This top one is our estimate. So this is for our current liabilities. This one will go to profit or loss. And then this one will go to non-current liability. And with that, you get the 4 marks or so 3 or 4 marks that go to tax. And it's quite straightforward. This is the standard pro forma. It will have some slight variations depending on the question, but it will always look something like this. So current liability now. So we'll go to current liability. We have tax payable, or is that tax payable? Yeah, or we can call it current tax, whatever you want to call that is fine. So current tax. What was that work for?
Yes.
Right? So work for, we come and we can put it at the end, we can put it anywhere. So it's equal to, that's the top one. Then we go to our profit or loss now. Our profit or loss, we have tax expense. We've already written work for it. We were waiting for it. So we'll put that figure there. And then finally, we have our non-current liability. So the only non-current liability was the deferred tax. And that's work for again, just to make sure that they know where you came from. And then you go and pick that figure and you put it there. And with that, I don't think there's any other thing to do. Okay, we've not closed our cost of sales. So let's get the final figure for cost of sales. So it's equal to sum of all of them command bold, command underline. So that's our figure. So we can go to profit or loss now to cost of sales and say is equal to whatever we computed for cost of sales. That figure. Is that fine?
Yes.
All right. So with this, me, I don't care. I really don't care. I'll just come here and do my profit after tax straight up, and it's equal to, okay, I didn't put negative for the ones that were negative, so it will not work. Okay, but you know it can work. I can do is equal to the revenue minus the sum of every other thing. Make my life easy because every other thing is negative now, right?
Yes.
So you can just use common sense to do something. That's why I was saying there's no law for anything. Just make your life easy. So that's that. And that's my bold underline. That's my answer. Full stop. This profit after tax, of course, is going upstairs. It's going to retained earnings, right? So it's equal to that figure. I've already subtracted the dividend. So it's equal to this. I hope it works. Yes, it did. So that's all. We're done. The OCE revaluation surplus is already in revaluation surplus. Oh, no. I forgot. Okay, so please let me just cut all of this. Let me cut all of them. That's not where they're supposed to be under G now.
Right? Yes.
So command V, because it was so simple. We didn't make even one adjustment to any of them. That's why I had the issue. But that's fine. So therein, you said?
We didn't do the gross profits.
Gross, I don't care about it. And there's no mark for it. Anything that is, even the profit after tax, there's no mark for it. I don't care. And if we do the gross profit now, it won't work the way it is. If we did the gross profit, we wouldn't have been able to do what we did now. Do you see that? If we did the gross profit, we couldn't have summed every other thing after revenue. It won't work. Except we would have done the gross profit, and then our profit after tax will be the gross profit minus every other thing. But now, if we try to do the gross profit, it can't work again because we've already done a sum for everything there. It will scatter everything we're doing. And there's no mark for gross profit. There's no mark for operating for this one now. You know, you can write operating profit here. So this would have been operating profit. There's no mark for it. I will not do it. It's a waste of my time. Irrelevant. Do you get what I'm saying?
Yes.
No, it's Chido that when you ask me questions, please answer me so that I will know that you get it. Because it's very normal. I wanted to complain that first time. I kept quiet. You've still done it again. Please just answer me small. I will be very happy. Because I'm not sure whether you understand or this guy says. Okay, so this one is equal to this plus this, right?
Yes.
And I can do plus this one. You know why I'm doing that? I put this other cell so that I can come here now and drag it down. It's just that you give me too many zeros. Okay, I can just copy this now instead. So command copy.
And I'll start pasting
in every place now. Command V. Be careful about it though, because remember that the last one, that's why I did up to the third cell. this third cell now, if you did not do it, it will not subtract this one if you did only 2 there. So make sure you remember the
Yes.
E. So I did the E, so I don't have any problem. If you do all of them for me, Command V, and then I can just do. There's got to be a way to do this faster now instead of doing the Command V, but no problem. I think I can drag this now. I hope it works. Let's try. My
Yes.
it's not that great. So I drag the 3 of them, and it gets the 3 of them to that side for me. Great. And we're done. The rest of it is just, what's our total asset now? Our total asset is equal to sum of all these ones. So the moment of truth has come. Sum of this, and our equity and liabilities must be exactly the same. If not, we've made a slight mistake, which I will correct very quickly. Because except we forgot something, I don't think we've made any mistakes. So that, boom. Yeah, that's great. Okay, so your first one was so balance sheet are balanced. Under exam conditions, we'll not expect you necessarily to do this, but you'll see that this is not the hardest thing to do. How many did I use now? I think 16. All right, so that's that. EPS straightforward. So I just come and do my EPS on the side here. So earnings, I think we have finished our time.
Yes.
Command V, but no problem, sorry, Command bold. EPS, so basic EPS, I just call it basic EPS on top. No need to write that again. So basic EPS. Our basic EPS is our profit after tax is what? So just go and copy it from where profit. Okay, profit after tax is just beside us here. Profit after tax. Then number of shares.
80,000.
Number of shares is equal to nominal. Nominal divided by par. Right? That's what we said earlier.
Yes.
The command. Let me change this thing somewhere here. Command B. Yeah. So nominal divided by par, which is 50,000, right?
Yeah.
50,000 divided by 0.5. Boom. So we can come here and say it's equal to 50,000 divided by 0.5. And then therefore EPS is equal to our parts, Patricia divided by number of shares. Shares. So that's equal to this Patricia divided by number of shares. And that's all, which is, if you want to make that in this, it will be this multiplied by 100, right? If I want to make it, this is in cents now. Sorry, this is in dollars now, right? So if I want to make it in cents, it will be multiplied by 100 to make it in cents. Do you get what I said?
Yeah.
All right. So this bold in dollars, so I can dollar it. So just call that. So go to currency, and currency is in your exam. So no, I want it in more than 3 days. I want it in 3 decimal places. So where's that thing? Where's that thing? Where's that thing? Where's that thing? Okay, so add one more. No, no. So I want it in 3 decimal places. Uh-oh. No, I've pressed spoil. What did I? Okay. So, oh God, sorry. Okay, and then I can call this 37 cents. And with that, you've done everything you're supposed to do. You get your full marks. Is this fine?
Very fine.
So please, I implore you, please try as much as possible to practice all these things. They're not, at least this one is, this is bread and butter. Tomorrow we'll step up a little bit. This was maybe there should be a law against questions being this simple. Tomorrow's one will be slightly more interesting. You wanted to ask something?
I said, don't come and
I thought someone was asking something.
I said, don't think some exam for us. This one, like I said, there should be a law against simple. How simple it is.
But this one is too simple now. I'm not saying it will be very. I'm not saying it will be hard that you now say, is the examiner crazy? I'm not saying that, but at least now let it not be this. If it's this simple and you yourself, you'll not be happy that you passed. The exam was too simple, you know. But if you continue practicing, it will not be harder than this significantly. That's the truth. That's the honest truth.
Yeah.
All right. So that's our question. Good. All right. So we'll see on. I'm late for my other class. We'll see on tomorrow morning. So what did we agree on? For those that joined us late, we agreed that we'll start the class. Was it 15 minutes or 30 minutes earlier?
Let's do 30.
So that we can have more time to explain. So please go out. Once this comes to my iCloud, I'll send it to you. Please watch it. Make sure you practice. This thing I've told you is the person that practices the most that will get, that will be safe, not the person that is most intelligent. So please, if you can watch the video and practice this thing, go through the Excel, do it. I started this thing some people know when I was learning this thing. It's a few months ago. You can practice and become as proficient as this with your spreadsheet, and it's only you that will benefit from it. I'm a post-lockdown baby. All right, so see you tomorrow. Have a good one.
Thank you, Brian.
See you tomorrow. Thank you.
All right, bye everybody. Bye.